Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. See, today we are discussing the most important and interesting subject, income tax. ನಿಮ್ಮ ಡಿಗ್ರಿಯಲ್ಲಿ ನೀವು ಒಂದು 25 ರಿಂದ 30 ಸಬ್ಜೆಕ್ಟ್ಸ್ ಓದ್ತೀರಾ ಅನ್ಕೊಂತೀನಿ. ಅಷ್ಟು ಸಬ್ಜೆಕ್ಟ್ಸ್ ಅಲ್ಲಿ ಎಷ್ಟು ಸಬ್ಜೆಕ್ಟ್ ನಿಮಗೆ ಯೂಸ್ಫುಲ್ ಆಗಿರುತ್ತೆ ನಿಮ್ಮ ಲೈಫಲ್ಲಿ ಗೊತ್ತಿಲ್ಲ. ಬಟ್ ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ will be useful for your whole lifetime. Either you can calculate on your income tax, or if you are an employer or employee, you will calculate TDS. If you become a professional, then this subjects will be a profession for you, right? So whenever you are learning income tax now, you should have an attitude that you should be master in this subject. If you are in that attitude, you can enjoy this subject. Now let us start the basic concepts of income tax. Tax is derived from the Latin word. It means rate. Tax means rate. See, government levies the tax. The taxes are levied by the government. Why they are levying these taxes? The government provides services. We'll call it as public services. To meet the expenditure of the services which they are providing to the public, they need an revenue. Income, right? So tax is the basic revenue to the government. You can call it as government administration. To manage the government administration, government will levy the taxes. That's why it is called as cost of living in a society. Cost of living in a society. The tax has been divided into two parts. Tax na ಎರಡು ಭಾಗವಾಗಿ ಮಾಡಿದ್ದಾರೆ. ಒಂದು ಡೈರೆಕ್ಟ್ ಟ್ಯಾಕ್ಸ್, ಇನ್ನೊಂದು ಇಂಡೈರೆಕ್ಟ್ ಟ್ಯಾಕ್ಸ್. ಅಂಡರ್ ಡೈರೆಕ್ಟ್ ಟ್ಯಾಕ್ಸ್, impact and incidence of the tax, impact and incidence of the tax falls on the same person. That's why it is called as the direct tax. Under indirect tax, impact and incidence of the tax falls on two different persons. That's why it is called as an indirect tax. And here, because the impact and incidence is falling on the same person, the burden of tax you won't be able to shift. But here, under indirect tax, impact means initial burden of the tax, incidence means ultimate burden of the tax, will be shifted to the subsequent or ultimate users. And the direct tax is progressive in nature. That means on your income, based on your income, though whatever the tax you have paid will be proportionate to the your income. When income increases, automatically your tax rate also increases. That's why it is called as progressive. Regressive means irrespective of your income, whatever the certain percentage will be fixed on the purchases that you are going to pay. That's why it is called regressive. And time of tax collection is under direct tax. At the year end, once you receive all your incomes, tax will be calculated. For asset, you will value the asset, on that you will calculate tax. But indirect tax, at the time of sale, purchase, or while rendering the services, tax will be collected. The event of taxable are under direct taxes, income and wealth. Under indirect tax, purchases, sales, manufacturing of goods and services, rendering services. So these are the two different types of tax. A good taxation system is very important for the country, right? So the good taxation systems are called canon of taxation. These are offered by the Adam Smith. Canon of equity. The equity means here we are talking about justice. Whenever we speak about justice, we need to speak about the ability of the payment of tax also. Ability of payment of tax. That means the equity directly supports progressive tax. That means whatever your income, on the tax should be calculated, right? Whenever you have high income, you need to pay high tax. Low income means low tax. That is what the equity is. Canon of certainty. The certainty says the taxpayer should be aware of the time of tax and the amount should be known in advance. So then the taxpayer can keep ready the balance of tax, can he can keep it ready. So that's why the certainty is not arbitrary, right? Canon of convenience means the taxpayer should know the mode of payment and the time and the time to pay this tax. Time should be set. Example, land revenue will be collected at the time of harvesting and income tax will be collected on at the sources, right? So that's why it should be convenient to the taxpayer. Canon of economy. We are paying tax for the welfare of the economy, society's improvements, right? For that, the proportion, a major proportion of the tax collected should be given to the government treasurer, because we are paying tax for the government administration. When they have major proportion of tax in their hands, then they can make better decision for the development of the economy, right? And who is having power to levy the tax? Here we have a constitution of India, it is mother of all the laws. The constitution of India says article 265. Here, in Constitution of India, we don't have any sections. We have article and schedules, right? There should be a difference. So, Article 265 lays down that there is no tax shall be levied or collected except by authority of law. That means, see, there is a relationship related to Article 246. In 246, read with Article 265 of the Constitution of India, empowers the central government to impose taxes and make laws on taxes on income other than agricultural income. This we will understand. Just hold on. Here, Article 246 of Indian Constitution has given power to make laws, right? See, whenever we are in the federal government, we have Constitution of India also. So law has given rules, regulations, procedures, everything, but they can't come and make. So that's why they have given power to make the law. So Article 246 has given that power to the Parliament of India and state legislature under Schedule 7 list. Under that list, we have more list ಇದೆ. Union list, state list, concurrent list. Under union list, we have some entries. The entry 82 is related to this income tax. So, the union list is nothing but the central government. So, central government have all power to make the law. So, whatever your syllabus, whole income tax is related to the central government, not the state government. All the laws are made by the central government. And state list is there, that is entry 46. The lists we have under that entry 46 is for the state, the legislature of any state. Now we will understand this. Here we have a connection. See, Article 246 read with Article 265 of the Constitution of India empowers. Constitution of India empowers central government to what? For imposing the tax. For imposing the tax and making law. On taxes on income other than agricultural income. See, agricultural income is also taxable, but not under the central law. As per the central government union list entry 82 in income tax, that's why we will write agricultural income as exempted income. Whatever related to the agricultural law will be made by the state list, that is legislature of any state. The concerned state will make law related to the agricultural income. They'll collect tax on agriculture also, but it is very minimal. And concurrent list. Concurrent list means where at some point both lists were meeting. So under that, both parliament and state legislature will make decisions. Understood, right? Here you no need to remember all these things, but you should know what is the union list entry 82 is, what is state list entry 46 is. Okay, now we will understand the most important thing, that is overview of income tax law in India. In India. So this is most important. Components of income tax law. Totally we have 5 components under income tax. What is the first component? The first component is Income Tax Act. Income Tax Act 1961. Then we have Income Tax Rules 1962. Income Tax Rules 1962. Then we have Finance Act. Then circulars, notifications, court decisions. On income tax department, many cases are there, so that's why court decisions are also the one of the component of the income tax law. Now here, the Income Tax Act 1961 gives you provisions, principles, what you have to do. Only the main things he will tell. You will get under the Income Tax Act. ಏನ್ ಮಾಡಬೇಕು ಅನ್ನೋದನ್ನ ಹೇಳೋದೆ ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ ಆಕ್ಟ್. ಇದರಲ್ಲಿ ಟೋಟಲ್ ಆಗಿ 23 ಚಾಪ್ಟರ್ಸ್ ಇದೆ. 23 ಚಾಪ್ಟರ್ಸ್. The 23 chapters contains 298 sections, 14 schedules. 14 schedules. Okay. ಬರೀ ಆಕ್ಟ್ ಇದ್ರೆ ಸಾಕಾ? ಲಾ ಆದ್ರೆ ಎಲ್ಲರೂ ಫಾಲೋ ಮಾಡ್ತೀರಾ? No. When we say it is rule, compulsory, mandatory, you have to do it, then you will do it, right? That's why 61 Act started in 1961 but came into enforced in 1962. Income tax rules. Here you will get the complete procedure. Complete procedure. Now you can see only heads of income means salary, income from house property, capital gain. Like that we have a heads of income. That is Act. Only Act. But under salary we have rules to calculate the perquisite, rules to calculate the HRA, rules to calculate the leave encashment salary, right? So those rules we will study under the Income Tax Rules 1962. And it received President assent on, means President signature on 13 September 1961, but enforced in 1st April 1962. Yes. Now Finance Act. See here, Income Tax Act 1961, Income Tax Rules 1962. Years we have. But under Finance Act we have written budget. There is no year because every year we will do budget, right? Every year we have a budget. So that's why here every year the concerned year you will take as that particular Finance Act. Under Finance Act budgets, we'll discuss about tax rates and the amendments. Any new amendments is there means that will be comes under the Finance Act. Then circular and notifications. These are the legal announcements. Legal announcements. If I come and say the tax rate has been changed, do you agree? No. The circular and the notification should be issued. And if I issue notification, a circular, is it possible? No. The concerned department should issue. So that also we will understand which is the department who is concerned for issuing this notification circulars, right? Court decisions. Everybody will say court laws are like that. ಒಬ್ಬೊಬ್ರು ಒಂದೊಂದು ಹೇಳ್ತಾರೆ. ಇದೆಲ್ಲ ಹಿಂಗಲ್ಲ, ಹಂಗೆ ಕೊಡೋದು ಹಿಂಗೆ ತಗೊಳೋದು ಹಿಂಗೆ ಅಂತ ಎಲ್ಲಾನು ಕೇಳಕ್ಕಾಗುತ್ತಾ? ಇಲ್ಲ. ಅದಕ್ಕೇನೆ ಕೋರ್ಟ್ ಡಿಸಿಷನ್ಸ್, ಅದನ್ನ ನಾವು ಕೇಸ್ ಲಾ ಅಂತ ಕರಿತೀರಿ. ಸೊ ಒಂದ್ ಕನ್ಸರ್ನ್ ಪಾರ್ಟಿ ಏನೋ ಇಶ್ಯೂ ಆಗಿರತ್ತೆ, ಆ ಸಿಚುವೇಶನ್ಸ್ ನ ಕೇಸ್ ಲಾ ಅಲ್ಲಿ ಎಕ್ಸ್ಪ್ಲೈನ್ ಮಾಡಿರ್ತಾರೆ. ಇಂಟರ್ಪ್ರಿಟೇಷನ್, ಅದನ್ನ ನೋಡಿ ನಾವು ಅರ್ಥ ಮಾಡ್ಕೋತೀರಿ. ಸೊ ದಟ್ ಈಸ್ ವೈ ಇಟ್ ಇಸ್ ಕೋರ್ಟ್ ಡಿಸಿಷನ್ಸ್ comes under case law and interpretation. Based on this we will understand what exactly happened, what is the truth, right? So these are the important components of income tax law. Now, what is the tax administration? Who is going to administrate? Central government have several ministers. See, in income tax, the state government is not coming. Any decisions is not taken by the state government. It is taken by central only. So that's why the central government have several ministers. Taxation is handled by finance minister. Right? So now ಇದಕ್ಕಂತಾನೆ separate department ಇದೆ, finance minister. ಅಲ್ಲಿ mainly we have three heads. First minister. The minister will be a member of PM's cabinet member will select as a minister. Who is the present finance minister? Right? So cabinet member. See, we don't have all the ministers, we are not going to select. Totally 29 cabinet ministers ಇರ್ತಾರೆ. ಅದರಲ್ಲಿ ಒಬ್ಬರು ಫಿನಾನ್ಸ್ ಮಿನಿಸ್ಟರ್ ಆಗಿರ್ತಾರೆ. 3 ಇಂಡಿಪೆಂಡೆಂಟ್ ಮಿನಿಸ್ಟರ್, ಸ್ಟೇಟ್ ಮಿನಿಸ್ಟರ್ಸ್ ಇರ್ತಾರೆ. ಅದರಲ್ಲಿ ಒಬ್ಬರನ್ನ ಅಸಿಸ್ಟೆಂಟ್ ಆಗಿ, ಟೋಟಲಿ 2 ಅಸಿಸ್ಟೆಂಟ್ಸ್ ಇರ್ತಾರೆ. ಅದರಲ್ಲಿ ಒಬ್ರು ಇಂಡಿಪೆಂಡೆಂಟ್ ಸ್ಟೇಟ್ ಮಿನಿಸ್ಟರ್ ಇಂದ, ಇನ್ನೊಬ್ರು ಸ್ಟೇಟ್ ಮಿನಿಸ್ಟರ್ಸ್, ಟೋಟಲಿ 47 ಸ್ಟೇಟ್ ಮಿನಿಸ್ಟರ್ಸ್ ಇರ್ತಾರೆ. ಅದರಲ್ಲಿ ಒಬ್ಬರನ್ನ ಅಸಿಸ್ಟೆಂಟ್ ಮಿನಿಸ್ಟರ್ ಆಫ್ ಸ್ಟೇಟ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. They are not part of cabinet. They are not part of cabinet. That's why I said they are the state ministers. Only from the cabinet, one person we are selecting as a minister. And these 2 ministers are working as an assistant to this minister. They work as an assistant a minister. And they are independently head a minister. Okay. And the department, the finance ministry department is there, no, it is called as revenue. For us it is an expense, right? We are paying tax, but for government it is a revenue. That's why it is called as department of revenue. You can see the website finmin. The website name is finmin.nic.in. Okay, we have discussed 2 different types of tax, right? When the tax type is different, we should have separate department also for the circulars, notifications, and to make amendments, laws and all, right? So that's why here we have 2 different departments, that is CBDT, CBIC. CBDT is Central Board of Direct Tax. So the name only says all the amendments or any notifications, issues or laws related to the direct tax will be made by the CBDT. If you have seen any notification related to the effect of changes in the tax provisions, anything, means the below CBDT name will be mentioned. So these are the 2 websites. You can check information in this website, that is incometaxindia.government.in. If you want to file your e-filing, then you can go to this website, incometax.gov.in. See, whenever you are studying income tax now, try to visit the official website, so you will get a knowledge as well as you are touch with the current technology, right? So you will, at least you can try what is the different heads are there, options are there, how to fill a e-return form. You will understand. When you understood practically, no need to by heart theoretically, right? And CBIC is Central Board of Indirect Taxes and Customs. Under indirect tax, we have GST and custom both. So that's why cbic.gov.in and gst.government.in. These are the 2 official website, and any information related to tax if you want, right, you have to visit the official website. Now we will understand the important definitions under the income tax law. See, in general, person means all individuals we will consider. But under income tax, the different peoples are paying the taxes. So all those are covered under this name person. We have a section for that. That is section 2, subsection 31. Person includes the following: an individual, a Hindu undivided family, a company. A company means here, see, we have two types of company: Indian company, foreign company. If Indian company means they are paying Indian tax in India only, so no need to worry. But foreign company again classified into two: the foreign company which are paying dividend in India and does not pay dividend in India. When a foreign company pays dividend in India, then it is considered as a domestic company. It is an Indian company. So the tax rate for this is applicable. Domestic company, foreign company which pays dividend in India means they have Indian shareholders. So they'll come under the Indian company only. And the tax rate applicable same as like Indian company, whatever it is there, will be applicable for these companies also. Okay. And whenever you see foreign company, you need to check it out whether they have paid any dividend in India. Okay. Then a firm means they are registered under the Partnership Act 1932. An association of person means here the group of persons coming together. It is normally a not for profit organizations. Okay. Local authority means municipal corporations, municipal parties. They all are coming under the local authority. And any persons, if you are not falling under above 6, then we will record under the artificial judicial person. Now, who is an assessee? Now, we have understood person, who are all coming under the person. Now, assessee. Assessee means section 2, subsection 7 says, by whom any tax or any other sum of money is payable under this act. The person one who earns money for that he pays the tax is called as an assessee. Right? And we also have another definition, whom any proceedings is pending under this act. This is very important. Proceedings. If he under this act provisions he has any pendings, or if he is a defaulter, if he is a defaulter, then he is also called as an assessee only. And who is accessible? Income or loss of any other person. Now we have very talented kids nowadays, right? And many kids shows are also coming. If one of the kid is very good in drama or dance or any other singing competitions, he is earning income, but he is a minor. Now who is responsible? Because he is minor, he can't pay tax. If that is the case, the parents will give money transfer account to the kid only, right? And they will say, we don't have any account, this is my son or daughter's account, right? So it is not possible. If your son is minor, your or daughter is minor, he is not able to pay tax, then you pay tax on behalf of him. That is what income tax department says. So here the father or the mother becomes an agent or a on behalf of the son. The father is paying tax, he is an assessee, right? So is called for non-residents, one who pays the tax for on behalf of non-residents is called as an assessee. And here the most important word you need to understand is 2 years. You need to understand only 1 year we have, no, why 2 years? But in income tax the 2 years are very important, that is previous year and the assessment year. What is previous year? Here I have written with the difference. When you learn with a difference, you will never forget. That's why. Previous year means the financial year in which income is earned. Earning means present, earned, right? Payment of advance tax on estimated income. Then also TDS is deducted in many cases. Previous year may be less than 12 months also. Understood now what is previous year? In which you already earned your income, you made your advance tax, and also you have deducted your TDS, and because of reasons you have not able to continue your business, discontinued business the previous year itself, or you are leaving country for a job purpose or employment purpose, right? So then these are all coming under the previous year. What is assessment year? Assessment year is financial year in which tax is assessed. So whatever you have earned in the previous year, you'll make payment or pay tax in the assessment year. Assessment year is always 12 months. Is always 12 months. You are going to complete the 12 months. Then under assessee, we have four types of assessee. Normal assessee, representative assessee, deemed assessee, assessee in default. See, one who pays regularly earns income in the previous year and pays tax in the assessment year is called a normal assessee. Representative person means here we have seen the father and daughter case, no? That is representative person. If the child is minor, then the father pays the tax. So he becomes an representative assessee. Deemed assessee means they are legal heir. Now head of the family is dismissed or died. Because of that, the eldest son will be responsible to pay the taxes. If the partner died, then his executor is liable to pay the taxes, right? So they are called the deemed assessee. Assessee in default means, this is very important, the person who fails to perform his obligations, statutory obligations, without paying a tax, then he is called a assessee in default. Now example, the minor case only we have taken. If father says he is a minor and he is not paid his tax, then he becomes a assessee in defaulter, right? And if you are not filed your returns, then you will become assessee in default. So these are the four types of assessees. And non-assessee means whose total income of an entity is less than the exemption limit, then the entity is called a non-assessee. Then we'll understand the important definitions for the income. Because on our income only we are paying income tax, which overall we'll call it as income. So definition of income tax under income tax, section 2, subsection 24. The term income specifically includes the following. Here, profit and gains, dividends, voluntary contribution received by a trust, any special allowance benefits, perquisites in the hand of employees, city compensatory allowance, dearness allowance, any benefits of perquisites to representative assessee, capital gains, insurance profit, banking income of a cooperative society, winning from lottery, amount received under Keyman insurance policy. If you receive in any form, then it will be considered as your income. Now, we have discussed the previous year and assessment year, right? Whatever the income we have earned in the previous year, for that we will pay tax in the assessment year. In some cases, we'll pay the tax in the previous year itself. So these are called exemptions, certain exemptions. So what are those exemptions? The first one is income of non-resident from shipping business. This comes under this section 175. 175. Sorry, this is income of non-resident from shipping businesses, section 172. An income of a person leaving India for business or job purpose, then is coming under the section 174. Section 174. Income of bodies formed for short term duration, this coming under section 174A. 174A. An income of a person who likely to transfer the property to avoid taxes, section 175. 175. And the last one is income of a discontinued business is section 176. See, for all above four cases, it is they are going to pay in the previous year itself. But for the fifth one, income of a discontinued business, the assessing officer will take decision whether they need to pay the tax in the previous year itself or they can pay in the assessment year only for the discontinued business. Then we need to calculate here the total income. How we are calculating our total income? On what basis we will calculate the total income? By determining the residential status. So residential status, whether he belongs to India or he is outside India, outsider of India, right? So that we will understand. And whatever the headings, the steps here we are studying, we'll study in detail as a unit. Okay, here just understand the process. Uh, Once we identify or determine the residential status of a assessee, then we will classify under which head his income is falling. We have under income tax 5 heads of income: income from salary, income from house property, income from capital gain, profit and gain from the business or profession, income from other sources. So once we find out under which head it is falling, then we will compute income under each head, applying the charging and deeming the provisions and providing the permissible deductions, exemptions for under that particular section. After that, we'll apply clubbing provision. The minor case. Now here father is the assessee. So minor son is also having an income. So we will club the minor son income here. Okay. Then we will set off or carry forward set off losses as per the provision of the act. Then we will get gross total income. Then we have deductions. The deductions comes under chapter 6. It is schedule 6. So all the sections from section 80C to 80U, under which provision is applicable, that we will select and we will deduct the deductions. Then we will get total income. Once we get total income, we will check the rate of tax for the income, which income is falling, the rate of tax is falling in the slab rate with the help of slab rates. Then we will check out whether he is applicable for surcharge or rebate under the section 87A. Surcharge we will charge when his total income is more than 50 lakh. More than 50 lakh. Rebate will be given when his total income does not exceed rupees 5 lakh. Okay. How we are calculating rebate? On his total income tax payable or amount of rupees 12,500. By comparing these two, whichever is less or lower will be considered as a rebate. Then we will charge health and education cess on additional surcharge. Is an additional surcharge, that is on tax only we will calculate this 4%. Okay, then we'll check it out. What is the advance tax and the TDS for him? See, if he is paying advance tax, he will pay in 4 installments. The first installment falls 15th June. Second installment is on or before 15th September, on or before 15th December, on or before 15th March. If he is a small taxpayer, then the income tax department has given relief, but he can opt for a presumptive taxation scheme. Under presumptive taxation scheme, 8% on his total turnover will be taken as a net profit. On that income, he will pay tax. That is on or before 15th March, he will pay. Instead of paying 4 installments, he will pay in a single shot on 15th March. Then we'll get whether he need to pay, the tax payable is there or if tax refundable. Okay. Then rounding of total income and taxable income. Here in income tax, the when the number is 5 or more, right? Like example 41,465 is there. This we will round up to upper side. If it is less than 5, we'll round up to lower side. And paisa will be ignored here. Tax planning. So what is tax planning? Planning only says legally they are planning, right? To reduce the tax. How they are reducing tax? Full advantages provided in the act through various exemptions, deductions, rebate, relief they are using and they are reducing the tax. That is why it is tax planning. They are using whatever the advantages provided in the income tax, right? Tax evasion. Tax evasion is illegal. Illegal way to reduce the tax. By deliberately suppressing means his income is purposefully is showing low income by increasing the expenses and reducing the tax. That is called tax evasion. This is punishable. Okay. Tax avoidance. Tax avoidance means by he is not breaking law but he is bending law. Okay. By using the loopholes available in the tax, he is avoiding the tax. That is tax avoidance. Now we have seen the rates, right? Under rate, we have two types of rate: flat rate, slab rate. Slab rate will be given for like individuals based on age, that is senior citizen, upper senior citizens. On that, based on their income, tax rates will be charged. That is slab rate. Flat rate is for the company. Some benchmarks will be fixed, no, 20%, 30%. So that is called flat rates. Okay. Now here, let us calculate tax liability for the Varun. Compute the tax liability of Mr. Varun. His total income is 51 lakh. Age is 42 years and he is a resident of India. Okay. Now here we need to calculate his tax amount for the 51 lakhs. Right. Up to 2.5 lakh, tax is nil. From 2.5 lakh to 5 lakh at 5%. So here we are taking 2 lakh 50,000 into 5%. We will get 12,500. Right. Then from 5 lakh to 10 lakh at 20%. Here we are taking 5 lakh. 5 lakh into 20% is 1 lakh. Now what is the remaining amount? Here we have covered up to 10 lakh. Remaining is 41 lakh. So first we will take it for 40 lakh. That is above 10 lakh is at 30%. We are calculating 40 lakh into 30%. 1 lakh, because it is 51 lakh, no, remaining balance is 41 lakh into 30%. Why we are taking separately? I will show you. We can take it together also, but you should not get confused. That's why I have taken it separately. And we have a, while calculating total tax liability, And surcharge also we need to know separately. That's why here we have taken it considered here separately. Okay, so it is 12 lakh, and this amount I will write here, that is 30,000 it will come. Now if we total these three, 13 13 lakh 12,500 will get, and if we add this 30,000 we'll get 13 lakh 42,500, right? Now we are calculated taxable amount. Now 50 lakh, the tax is 13 lakh 42,500. Here he has crossed the 50 lakh for surcharge. Surcharge is tax on tax, right? More than 50 lakhs. So he is falling under 50 lakh to 1 crore. 10% we are charging. So 10% will calculate. We are calculating 10% on 51 lakh. It is tax on tax. What is the tax amount? The tax amount, total tax amount is 13 lakh 42,500 into 10%. Into the 10% will get 1,34,250. 1,34,250. Now what is the total tax payable amount? If we add this we will get 750, 6, 7, 14, right? 14 lakh 76,750 we are getting. Do you think is this justice? Because of only 1 lakh increase in the income, he is supposed to pay 1,34,250 as a tax. 1,34,250 as a tax. Do you think is this a justice? No. Then what income tax department has said? You take a marginal relief. Now, how we can take the marginal relief? What was is tax for 50 lakh, 13 lakh, 12,500. 51 lakh is also there. Total we have taken, no? 13 lakh, 12,500. And what was his tax for 51 lakh, including surcharge? 14 lakh, 76,750. Now, what was the difference here? It is 1 lakh difference, right? So, leave the 1 lakh. Take only the thousands. Now, from this 76,750 minus this 12,500, you will get 64,250. From 76,750 minus 12,500 is 64,250. This is his marginal relief. Marginal relief. Right. So now we will calculate his tax liability. Marginal relief is how much? 64,250. For 51 lakh, the tax amount is 14 lakh 76,750. After adding the surcharge, from this deduct the marginal relief. Marginal relief is 64,000. It's 250, right? 250. 14 lakh 76,750 minus 64 250 is 14 lakh 12,500. Now on this surcharge we are charging health and education cess. Add health and education cess at 4% on 14 lakh 12,500 into 4% is 14 lakh 12,500 into 4% is 56,500. If we add, we'll get the tax liability is 14 lakh 69,000. This is our tax liability. See, income tax is the subject where you have to do everyday revision. But theory part, sections and all, you no need to by heart. You have to aware of it under which particular section is it is coming. But rate, you have to, right? So that's why you need to practice every day. Practice makes you perfect. In next video, I'll upload the second unit, that is residential status. Thank you for watching. Have a great day. If you are not yet subscribed, kindly subscribe the channel. And if you want any particular video or in completely in Kannada, also you can comment me. So I will do the same video in Kannada also. Thank you.